How's it, guys? In this video I'm going to do technical analysis of Bitcoin, Ethereum, look at the Fear and Greed Index, look at some of the biggest Bitcoin addresses where the whales are buying and selling. I'm going to look at USDT Dominance, also Bitcoin Dominance, and a couple of other things. So I want to give a shout out to our BYBIT South Africa community on Telegram. If you're South African and you trade on BYBIT, go check it out. I'll put a link in my description. A very nice community. Good to have other South Africans to chat about our trades about and what the market is doing. Let's start on the Bitcoin chart, and you can see from September, October 2020, there's a beautiful run up from $10,500 all the way up to $65,000 in April this year. We had a bit of a dip going down, some consolidation, a run up, consolidation, a run up. And what it looks like at the moment is that we've got some consolidation happening here, and I believe this is very healthy for the market. You know, seeing these parabolic runs up, you get to the cycle top a lot quicker, and a lot of guys get wrecked that way. So for me, the slower run up is a very, very good sign. Let's look at the weekly. We can see last week the candle starting at the 1st of November closed out on 63,151. Last night we closed at 65,489, which means we've printed a higher high, which is very good for Bitcoin. We'll see in this week if we can push beyond these 69,000, 68,800 levels, which is the Bitcoin all-time high, and I expect we are going to challenge that because November traditionally is a very bullish month for crypto. Looking around the time of Thanksgiving, this idea comes from a YouTuber called Satoshi Stacker. He says his theory is that during the holidays in America, a lot of families are together and people say, hey, have you seen what Bitcoin's doing? They pop out their phones, go and buy crypto, and that possibly sees a push of crypto up. So as you can see on the weekly, coming from the 19th of July, you've had a very nice bullish trend coming up all the way to today, and printing higher highs except for these couple of 3 weeks from the 6th of September. Looking on the daily time frame, we've got a possible cup and handle formation forming here, although technically it's not really a cup and handles. Always like to look at the EMAs, and standard on my chart is a 8 EMA, 20 EMA, 50 and a 200. So generally when the 8 EMA crosses over the 20 and the 50, you see a bullish move going up, and at the moment you can see those lines are staying apart, which is a good sign on the daily. And looking back on the chart, across of that 8 EMA down below the 20 and the 50, we've had a big move down. So looking back again, when there's been a bullish cross, the 200 EMA at that stage was way above all of the other EMAs, and we were technically in a bearish phase. So you can see that cross up over the 20, over the 50, over the 200, and we had a very, very large move up there. So looking at some of the momentum oscillators, we can see the RSI is above 50 at the moment, which is normally bullish territory. We're having a small little consolidation period there, and the question is, are we going to move up or move down? Looking at the stochastic RSI, we've had a bullish cross up, and that normally indicates that the MACD will have a bullish cross up. And if you look at the history as well, where there's been bullish crosses up, there's been a move up. There's a bullish cross up there, and there's been a move up there. That's not guaranteed, but generally it is an indicator of where price is on its way to. I like to use an indicator called Wolfpack as well. And you can see on the daily, Wolfpack is in positive territory. When it crosses over this line, you can see that it goes red, and normally that means price is going down. So let's look at the 4 hour, and see on the 4 hour RSI is kind of in the same position, although in the stochastic we're looking to have a little bit of a bearish cross down. So we might see price moving down further, just respecting this trend line, maybe coming down to 64,200. Looking at the 1 hour, looks like momentum is going to be moving down, but it doesn't mean that Bitcoin is not bullish. Overall, the Bitcoin trend has been bullish. So as you can see, from the 20th of July, been following this trend line, and since the 5th of October coming to respect that trend line very, very nicely. So watch out for if Bitcoin breaks this trend line on the daily. We could see a couple of moves down, touching some of the support areas. Nice support here at 60,800. You can see that from price touching and bouncing, touching there. Okay, it broke that area on that date, touching and bouncing, touching and bouncing. So that is a very, very strong support area. Other support areas to look out for on the 4 hour is this level here at 64,000. You can see price touched a couple of times there, over there. There was some resistance there, and normally what happens is resistance gets flipped into support. There's a support area there and bouncing nicely off there. So $64,000 is a good level to look out for. What are some of the resistance areas? I would say, looking at the hourly, we've got resistance in this area. You can see price reaching those points and just rejecting most of the time. You can also see there's a support area there, previously dating from the 8th of November. So normally what happens with support areas, if price comes down below that level, it gets swapped and it becomes a resistance area. So that's a nice area to watch. Hopefully Bitcoin can challenge this area, come down, maybe, don't know, possibly touch that trend line, come, reject, and hopefully break through that area and see a move up. So what I like to do on the charts as well is to draw fib retracements and fib extensions. You can draw it from the bottom of the local low to the local high, which is the all-time high at the moment. So levels to look at, you can see exactly where we drew our support line, right on that 0.382 fib, and you can see price respecting that fib level very, very nicely. And the reason these levels are important is because a lot of bots use fib extensions and retracements to trade. And see also levels to look out for price to retrace to is that $63,000 level, or the 50% level, possibly going down to 62. We did see price come all the way down to 62,555 over the weekend. There's a possibility we could see touches on that again in the next couple of days. November, of course, is a very bullish month for crypto, so we could see large price movements. I mean, look at this price movement. We started out at 69,143 on the 10th of November. We had a huge drop down. You can see that price decrease was about 9.5%, which for Bitcoin actually isn't a lot, but that was a shakeout of over leveraged long positions. So leading from that, I want to look at some of the liquidations on Bitcoin, and I normally use coinglass.com for that. We can see here in the last 4 hours, liquidations, 54.64% long liquidations on Binance, 54.07%, BYBIT 60.54%. That possibly means that people are over leveraging their longs. They're expecting the market to go up very, very quickly, and it's not happening. So be very careful with your longs, because the whales need to make liquidity for themselves. If a whale has to buy $100 billion with a Bitcoin at this level, there's not going to be that much supply. So what they have to do is create the supply. So often that's why you see these big candles going down. They'll put in a sell order at that point. People see the order books and they get scared and they start closing out their longs, hopefully in profit, but most of them probably in a loss. And that creates a ripple effect, pushing the price down. And what happens is that the whale at this level now has liquidity and can buy up the supply, and that's why you see these big wicks up have bought up all of that liquidity that they've just created. So going back to the liquidations, if we look at the last 12 hours, 37.2 million longs liquidated and 49.64 million shorts liquidated. That's not a bad thing, because it seems like in the last 12 hours the market has been moving up. But once again, be careful on your leverage positions. Let's look at the live liquidations per exchange. FTX, we had a short liquidated there. Binance, LRC, long liquidated, long ETH and Bitcoin liquidated in a long. Most of them are longs at the moment. So that is a sign to me again, just be careful on your longs. Rather make spot buys if you need to at this point until we know Bitcoin is breaking up and getting into that really parabolic phase that everybody's expecting. When you look at the top 100 richest Bitcoin addresses, I normally pay attention to this number 3. You can see they hold 108,322 BTC with $7.1 billion. What's interesting is that the last in was on the 15th, but if you look at the actual address, the last buy that they made was 2 days ago, and they bought 1,123 Bitcoin. And look at the price that they bought it at, $64,190. So that tells me there's still value in Bitcoin at these levels. If a whale that owns so much Bitcoin is buying at this level, you got to know that there's still money to be made. But the interesting thing is that a couple of days ago, on the 9th of November, they sold 1,500 Bitcoin, and they sold it at $67,000. So they bought it at this level, interestingly enough, right at that support line and right where that 38% fib level is sitting, and they went and sold around about this level, close to the all-time highs. So once Bitcoin starts pushing above these levels, be careful again with your positions, because whales like to make money and they like to make liquidity available for themselves so that they can buy the dip and sell the highs. So another interesting thing to note is that there's a fear and greed index, and this is the fear and greed index for the traditional markets. A month ago there was fear sitting at 32 on the index, which means people were scared of losing money, so they were getting out of their positions. At the moment there's extreme greed at 83, which means people are buying the markets, and there's a saying that goes in Wall Street, there's no fear, only extreme greed. So be careful that greed doesn't motivate you. Watch the markets, watch technical analysis, learn to do technical analysis on your own, start charting on the charts. TradingView is a free platform. There's a link in my description. You can use it for absolutely free and use all of the indicators that I'm busy using at the moment. So next I'd like to look at the ETH USD chart. I use the inverse perpetual contract because I'm actually accumulating ETH. And let's start on the weekly time frame. You can see ETH has been extremely bullish. We've got this huge trend going up, and at the moment we've got a bit of a consolidation. Of course, we know with altcoins at the moment Bitcoin has the dominance, and whatever Bitcoin is doing, most of the altcoins are going to follow. So this frustrated me tremendously when I first started trading. I was looking at altcoins and thinking, wow, this is looking great, buy it. Bitcoin dumps, and all of a sudden the whole market dumps. So you just got to accept at the moment that whatever Bitcoin does, that the rest of the altcoins are going to do, and the rest of the market's going to do, until the Bitcoin dominance actually wanes. And we'll look at that chart in a second as well. Looking at the daily time frame, we've had a bit of negative momentum coming from the 8th of November, but we seem to be trading in a bit of a descending triangle. And if we can see ETH breaking out of this descending triangle at 4,735, which this morning it actually touched on the $4,724 region, I think we can see ETH challenging its all-time highs very, very soon. So we can see the all-time high sitting at $4,875. I'm very biased towards ETH because a lot of the smart contracts are based on Ethereum, and also NFTs, a lot of them are based on Ethereum, and there's a lot happening on the blockchain. The fact that they are burning a lot of ETH, I think on a daily or a weekly basis as well, it means that there's less supply, which means the price is going to go up. When there's less of something, basic economics, the price is going to go up. So let's look at some of the oscillators. The divergence indicator, RSI, crossing over the 50 level, and you can see a move up going there. and we've still got positive momentum happening there. We can see the Stokes RSI also a bullish cross up, and we've still got bullish momentum going on there. So it looks like the MACD has some space to move. There's a bullish cross up, and we can see volume increasing, and hopefully that volume will continue to increase. Looking at the squeeze momentum, it's in a squeeze at the moment, and if we look at the Bollinger Bands, what you can see is a narrowing of the bands, and you can see it's starting to narrow there, which means it's squeezing, which means that there's just a little bit of a consolidation happening, and when those bands widen out, then we could see a move up or down depending on which way the momentum is running. But at the moment the momentum looks like it's running into the positive territory. One thing to look out for is divergence. That's very, very important. You can see over here that when price made a higher high, the RSI and the MACD was, and the stochastic RSI were actually making a lower high. So that means there was bearish divergence, and you can see that that divergence started playing out. So it means that there's a discrepancy between the price and the momentum of the price, but you can see that the momentum actually continued there. So no bearish or bullish momentum to look out for at the moment, but something to look out for if price makes a higher high and the momentum on the RSI stays making a lower high, then we could see price drop down again. So be careful again there. Once again, starting on the weekly time frame, we can see last week from the 8th of November, there was indecision between the bulls and the bears. You can see by this candle there's a movement of price up, a movement of price down, and we kind of got stuck in the middle there. So we can see a nice movement up here with XRP, so hopefully can continue to respect that trend line and bounce off and go up. A couple of resistance levels to look out for. We can see there $1.40, $1.30, and I'm hoping that it can actually break through that trend line. So maybe trade and consolidate, bounce off there, test that $1.30, $1.32 level, and hopefully make a move up. So if we look at the hourly, there from about the 8th of November, we had this trend line developing, and you can actually say that it's a bit of a bull flag. So what constitutes a bull flag is that there's a very, very steep run up and a push down, and you can see trading into this little channel here, and I saw that price was coming to the top of this channel or flag, whatever you want to call it, and it was breaking out. So I took a position around about $1.1965 if I remember correctly. So I'm still in the position. Stop at the moment is at $1.20. So if it comes down back to that level, then stops are in profit. You can see that it's come and almost touched that area twice over the last couple of hours, but at the moment price looking quite strong. So if we have a look at the Bollinger Bands, you can see that there was a squeeze happening in this area, and at the moment there's a squeeze release, which means the price is going to move into the direction of the momentum. You can see also here this squeeze momentum indicator. You can see it is squeezing there, indicated by the black crosses, and as momentum was increasing, the gray crosses turned, which means there's a squeeze release, which means there's momentum moving upwards. So obviously I'm going to have to watch this. If the momentum starts to wane, then I'm going to look at possibly getting out of that long position or taking profits in that long position. One thing to note here, I'm seeing a little bearish divergence starting to play out, which means we've had higher highs on price, but on the RSI we've actually had lower highs, and we can also see that we've had lower highs on the stochastic RSI, so be careful of that. I do expect that that divergence is going to play out possibly in the next couple of hours, So I think we're going to see price possibly moving down to that $1.20 area. Hopefully I don't get stopped out, because I do want to ride this position a little bit further up. What I might do is actually move my stop a little bit further down, maybe to $1.18, $1.17, and put in a DCA buy at this support level. There's a very strong support level right over there. You can see price touching that level, $1.19, quite a few times, possibly even DCAing at that level, $1.18. But again, not financial advice. I don't recommend you DCA unless you really know what you're doing, especially with leverage. So shout out to Cameron on the BYBIT South Africa Telegram group. He asked me to look at some of the coins that he's interested in, so I thought I'll choose SHIB 1000 because SHIB is obviously very popular at the moment. Looking at the 4-hour time frame, I can see we got possibly a descending wedge developing here. Also arguments for possibly a descending triangle, but I can see price has been respecting this trend line a little bit more. Technically it's not a descending triangle because it's not more than 3 weeks in length, but this is a pennant that we are seeing here. So very, very strong move up from the 23rd of October. This move up should be a couple of days long, and we can actually do a measure from the bottom of that move to the top of the pennant, and we can move it to the breakout. So it's not broken out yet on this upper trend line, but targets that we could look at is around the 11 cents, obviously bearing in mind that this is SHIB 1000, so we've got to actually divide by 1000 to get the actual price. So 0.113130 divided by 1000, that's the actual SHIB price level target that we are looking at in the long run. So that's not to say that there couldn't be a dip down, possibly moving down, respecting that trend line and breaking out, but a good level to target is at least the top of that pennant, looking at the 8 cents, almost 9 cents level. Looking at the momentum oscillators on the 4-hour, we can see the RSI is about to cross over the 50 level, and normally when there's a crossover of the 50 level, we do see price going up in the short term. So stochastic RSI on the 4-hour, bit of a bearish cross down, but let's see what Bitcoin is going to do, and hopefully for the SHIB army this is gonna moon. We can see here on the squeeze momentum indicator that volume has actually been moving in a positive direction, so hopefully volume can continue to go over this middle line, and if there's a squeeze release, we could see what happened here and see volume shoot up. So not financial advice, of course, just do your own research, and again be careful with your leveraged longs. So looking at the wolf pack on SHIB 1000, we can see it bouncing off the zero line, and looks like we're going to get some positive momentum. So let's look at the 1-hour. We've just had a bullish cross up. You can see that the trend line on the wolf pack has actually been making higher lows, which is a very good indication. So and we've had a bit of more of a bullish cross up there. What we could see is possibly, if there's momentum down on Bitcoin, a bounce off this line and hopefully a move up once again. So again, spot buys are far safer than leverage trades. By the way, if you want to learn about chart patterns, candlestick patterns, and a lot more, check out the patternsite.com. I use it quite a lot, and you can go to chart patterns and you can see a lot of the chart patterns that I've been using. These are double tops, double bottoms, ascending triangles. Okay, this is a little bit more advanced. Some of the bat formations, channels, ascending and descending wedges, falling and rising wedges, flags, and of course pennants. So let's go have a look at the USDT dominance. Why this chart is important is because if USDT dominance falls, then the price of crypto goes up. If this rises, then the price of crypto goes down. You can see again on the 21st of May there was a huge dump in the market, and arguably the start of a bear phase in the market up until July. 21st of May, USDT went up sharply and Bitcoin dropped tremendously. You can see that from the 11th of June 2018, we've got a rising broadening wedge. And if you go to the patternsite.com, go to chart patterns, go to wedge, ascending, broadening, you can click on that. You can see what the formation looks like. You can see the overview. And by the way, Thomas Bulkowski, for each of these patterns, he's done between 800 and 1,000 trades, collected the data, tells you what the breakout percentages are, so you can read through that. You can see how to trade these different shapes. So what I'm looking at is the bottom of this trend line. You can see USDT respecting, bouncing, just breaking it there, but coming back up, respecting it, bouncing, respecting it, bouncing, and respecting it. So if we want to see this bull market continue, we need to see USDT dominance breaking this trend line and possibly going down to these levels, the 204 level. So once it breaks that, I believe we're going to see really big moves up in the crypto markets. So let's look at BTC dominance. And you can see here that it's kind of been trading in this range 48.97 to 39.99, and when this chart goes down, it means Bitcoin dominance is waning, which means altcoins start to rise. We saw a bit of a increase in Bitcoin dominance and then a drop, so kind of undecided at the moment in this area, but it's a very good chart to watch out for. We can see a cup and handle formation happening here, so I expect Bitcoin dominance to rise, possibly breaking these areas. And normally what happens is when Bitcoin goes parabolic, the altcoins kind of stagnate up until a couple of weeks afterwards. Then Bitcoin dominance should come down, altcoins should start rising up again. So let's look at the total market cap. We can see last week that the total market cap for crypto reached $3 trillion for the first time, an all-time high. So which means that the market is very, very healthy. We saw a bit of a decline coming into this week, but hopefully we can test those all-time high levels in the next coming weeks and see and break those levels, and that's how we're going to see Bitcoin possibly testing that $98,000, $100,000, possibly $135,000 levels by December this year. So let's look at total 2, which is the total market cap for all of the crypto market excluding Bitcoin, so in other words altcoins, and you can see that it's been trading in an ascending wedge and respecting this lower trend line very nicely, bouncing off, bouncing off, bouncing off. If we see it breaking this trend line, that means the Bitcoin dominance is increasing. If we see a break in the upper trend line, it means that altcoin market is probably here. So a good chart to watch. Another chart that I like to look at quite often is the ETH BTC. I believe eventually Ethereum could possibly flip the dominance and become a lot more dominant than Bitcoin. And you can see here, if this chart is going up, ETH is stronger than BTC. If this chart is going down, Bitcoin is stronger than Ethereum. So a little bit of a consolidation happening there. So we could possibly see this chart going down a little bit as Bitcoin dominance increases if it breaks all-time high, and a couple of weeks after that possibly Ethereum and the alts looking to increase in its dominance, and then we'll see the altcoin season really coming into play. So hopefully you've enjoyed this technical analysis. If there's certain coins that you like me to do some analysis on, reply in the comment section. If you haven't subscribed to the channel, please subscribe. If you like the video, please like the video and leave me a comment. See you next time.